In this edition of INN CEO Talks, I'm joined by Des O'Kell of Enterprise Group. And we're talking about the shift in the Canadian energy market and the opportunities that that shift creates. Des, welcome.
Thanks for having us.
The Enterprise Group, what an interesting group of companies, and you are focused on providing services that go out to the energy sector. What has changed in the energy sector that now makes this a very exciting time within the services area that you service?
Yeah, well, good question. What we have in front of us, obviously, we now have a Canadian energy economy that is certainly better than the years previous. So what we have here is a set of regulatory initiatives that are now in place that are really mandating the large emitters, which many of our Tier 1 clients are, where they have to start identifying emissions from extraction all the way to downstream that they go, and not only tracking their emissions, but looking to reduce them. Eventually they'll be audited on these items, but they really need to stay under a threshold. And that threshold, if you're over, you are financially penalized. If you're under, you can earn, of course, carbon credits, which show up on their balance sheet.
So who typically is your client then, and how are they going to benefit from your services?
Mm-hmm. Well, our clients are the producers, so they're out there developing their reserves in the field. So they're drilling, completing, producing their resources. What we're doing, we show up with all of the site infrastructure. So we don't have any drilling or fracking equipment or what have you, but we bring everything that they need to operate 24/7 in these very remote conditions. So we have mobile office buildings and the facilities like bathrooms, command centers, and medic shacks and what have you, communication towers, lighting, heating, all of the things they need to operate and stay in contact with head office, which is in most cases in Calgary. So these items all need power systems.
Right.
Okay. And what we have been able to do is, with regards to those emissions regulations, we have started a transition from diesel to using natural gas on site.
So you'll be replacing diesel generators to a large extent.
Entirely, yeah. Our systems make that shift immediately. Because the majority of our clients are actually producing natural gas and gas liquids on their properties, 80-85% of our clients were actually utilizing the gas that is actually produced on site. So that fuel distributor that needs to be paid bringing out fuel three hours up into the frontier and so forth, that goes away. And they start utilizing their own fuels.
Well, and we all recognize that natural gas, or CH4, has a much higher energy output than diesel, and therefore you get a more efficient burn and a dramatic drop in greenhouse gas emissions.
Yes, in fact, the whole emission spectrum goes down by quite a bit. Obviously, switching from diesel to natural gas is a 30+% reduction in CO2. But you're talking anywhere from 70 to 99% in reduction of NOx and SO2, and specifically particulate matter goes away by 99% when you move from diesel to natural gas. So big moves.
But one of the other points that I find very interesting about what you're doing is you're not saying, okay, we're replacing generator for generator. We're reducing the total number of generators as well as changing the fuel source.
Correct. Yeah. So what we're doing is on a typical site, there could be anywhere 10 to 20 generators. Every light plant has a generator at the bottom. You might have 8 or 12 light plants on a location. What we're doing is we're bringing in one large natural gas fired unit and our fleet consists of anywhere from 200 kilowatts all the way to a megawatt. And some of those are also natural gas turbines, so very efficient, operate at very, very low volumes as well, and extremely efficient and breaks down all those emission reductions.
So what is the potential market here? Like how many different drill operations and other energy related remote locations are starting to line up to say, yeah, we need this?
Yeah, well, I mean, the inside of the scope of drilling and completions, it's a sizable market. and we still have a tremendous runway. Fortunately and unfortunately, this past 7 years of a very poor Canadian energy economy, we've lost a lot of our competitors and peers.
Well, that's fortunate, though.
That's the fortunate part. Obviously, there's a lot of equipment, a lot of manpower has left Western Canada over that 7-year period, but we've been able to stay in our operations cash flow positive through those trying times, and we've been over the last 2 years retooling our fleet out of cash flow, and we've had that financial nimbleness over that period of time just because we've right-sized our business. We're in very good shape and really, really stoked about the next few years ahead of us.
So how long has Enterprise Group been around?
Incorporated in 2004, public in 2005, so 17 years. Graduated quickly in 2007 to the full Toronto Exchange Board. And so we've got a very substantial history.
Wow, and how many different companies do you have within the group?
There's 4 business units. Total locations in the Western Basin, and it's pretty much Alberta and northeastern BC. We're right up that natural gas fairway in the foothills with some other locations, 8 or 9 locations, if you include our head office in St. Albert.
So you're in this position now where you feel that you're going to be able to go out and capitalize on this market. Mm-hmm. Investors are going to be looking at you going, okay, so what makes you so attractive right at the moment?
Right. Well, good. I'm glad we can talk about that. We've seen in the last year, since the Canadian energy economy has gotten better, the larger cap producers, the CNRLs, the Suncors, the Tourmalines of the world have all gone from, they're 7, 10 times since the early days of spring of 2020. So they've seen the expansion and the recognition of that in the marketplace. What follows are the mid caps and then the small caps, and of course the service companies lag a little bit, and that's where we are. Mm-hmm. So we're a small cap services company. So we're in a situation where, although in the last year and a bit our stock prices almost doubled, we're still trading at slightly half of our breakup value.
Slightly half?
Yeah.
And that's a reflection of the anemic state of the energy sector over the last 7 years.
Yes. Yeah. Yes, for sure. I mean, it was tough to get the attention of the investment community when the entire Canadian energy economy was out of favor. That's changed. Like I said, the companies that get the best or the most recognition at first during that reversal to better times are the larger cap producers, and they've seen, like I said, 7 to 10 times their stock. But Tourmaline, a client of ours, $7 in March of 2020. They're $77, $80 today. So,
So, as you say, you're in a unique position. You don't have much competition because they've gone away. Suddenly, the market is turning around and demand will explode. Mm-hmm. Do you have the financial resources that you need should that market fully materialize so that you could meet the demand?
Yeah. The answer is yes. We've had a recent banking partner change here in the last couple of years, and it's one where the relationship is very aligned. They are very excited and enthusiastic about the Canadian energy market. Pretty much the source of their funds are from analysts that are very plugged in and stoked about the energy sector. So we have a banking partner that is really encouraging us for growth. We've done a lot of acquisitions in our time over the last 17 years, and we're back in that acquisition mode. We've got tremendous support and encouragement from them. Plus, we're public, so we have an equity market that we could look at in the future. Like I said, our prices are pretty low right now. We're not in a big hurry to go run out and do an equity financing at these levels. But like I said, we have tremendous runway in front of us.
So this is a really good time for investors to be looking at you.
I think so. Yeah.
Wow. So what's next? We see that this market is there on the horizon. What do you now need to do to be, ensure that your game plan can be easily executed?
Well, obviously, right now we spent during this retooling, we've spent time listening and to our clients and their needs, moving some of these clients to this diesel transition. We do have some significant capex to keep up with that demand and that adoption rate that we're, not every company has moved to the natural gas, but they are, and some are adopting quicker than others. But there is a play there that we're spending a serious amount of attention to. So that will play out, and we're feeding that capex through cash flow. And but sooner or later here, we're going to have to see, or we're going to see a serious adoption. Yeah. And where we're bringing that obviously up in northeastern BC, there are some interprovincial regulations that are a little more stringent on the BC side, and that's flowing into Alberta.
Well, that's good for you as well.
Yeah, it is, absolutely, because we do have a couple of locations in northeastern BC, and pretty much have a really good chunk of everything that's going on up there.
Well, that's fantastic. It looks like it's a really interesting, exciting time.
It is.
For your company. It's also good to hear that there's this move forward in addressing greenhouse gas emission challenges that we face in the country. And the market looks like it's really going to be moving towards this clean, greener energy source from Canada.
Mm-hmm. And management thinks so as well. We've had a tremendous NCIB, normal course issuer bid program that's been going on for a few years now. We've bought and canceled back over 9 million shares over that period of time, and management has increased its ownership up to 40% now. So we think so too.
Yeah, it's clear you're fully invested in this work.
We certainly
in
are.
The company. Well, thanks for your time today.
Thank you.